So I'll assume you saw the disclaimer. So PYX Resources is a mineral sands mining company in production since 2015. We're listed in Australia since 2020 when we did the original IPO, and since 2021 dual listed on the main market of the London Stock Exchange. We have a very large asset. We have 2 mines in Central Kalimantan, Indonesia. It's the 4th largest asset by inferred zircon resources in the world, the 2nd one in production. Not only do we have a very large asset, we also have a very high quality asset. Mineral sands out of Kalimantan, in particular zircon, are known for their high whiteness, low radioactivity, low iron, low alumina, which make them ideal for the use of fused zirconia, which is what you use for high-tech applications of zircon, which is the fastest growing segment, where you use zircon for semiconductors, batteries for electric vehicles, solar cells, etc. Since we started, we have been focusing on increasing our volumes, which we have done months after months over the last almost 3 years. We have an opportunity of drastically reducing our costs by changing for third-party contract miners to our own in-house mining, and last year we started with the production of byproducts, rutile and ilmenite. Timing could not be better for our project. Since we started 2020 was just when the trade war started between Australia and China. Australia is the biggest producer of zircon, China the biggest off-taker. We're in Indonesia, the biggest Belt and Road country, and with that a strategic ally of China. Also, there has been a lack of supply, a predicted lack of supply for zircon for the actual demand, which is growing, which has put a lot of pressure over prices, which have increased more than double since 2020. And I'm convinced that will continue, since even if you take all the projects that are out there at the time they have been announced and in the volumes they have been announced, it's not enough to compensate for the lack of productivity in the actual mines, which are getting older. Also, most of the governments in the world have announced zircon as one of the critical minerals required towards the transition to carbon zero. We have customers all over the world in different segments to be sure that we're prepared for any type of geopolitical problems, which we have gone through all of them over the last couple of years. We have been sold out since the beginning. We only have the inventory that we require for the next order. It's a very particular mine because of the high concentration of zircon. At the end, from the mineral sands between zircon and titanium oxide, you want to have more of the expensive stuff, which is zircon, which today sells at $2,300 per ton, while ilmenite is around $300. So you can see from the chart, on the x-axis, we have a very high concentration. Mandiri is the mine in production at 4.8%. Tisma is totally licensed, not in production yet, at 3.3%, which gives us a very high assemblage value, 3 to 5 times bigger than the one of our peers, which is at the end a natural margin. So on the top left, you will see the supply-demand imbalance. Again, this had been predicted by the industry and investment banks that follow the industry. Since 2020, as China went out of the first part of the pandemic and grew the demand, there was a lack of supply with the actual demand. Prices went from $1,300 per ton. Today, that's at $2,300. We sold at a high of $3,100 last year. And we believe that this lack of supply or imbalanced supply-demand will grow at a CAGR of 2.5 to 3% over the coming years, keeping pressure on prices. On the bottom, you see the pricing. Yes, it is a commodity, as any commodity prices go up and down. But if you take the prices since 2005 and cut through the commodity supercycle in 2012, prices have continuously been going up and have reached now the higher part of our expectations. We're in Indonesia. We produce at international standards. We have, since the beginning, built our company on a solid base of sustainability with a program called PYX Cares. In August last year, we joined the UN Global Compact Initiative, we have issued our first sustainability report to make sure that we make an impact on our local communities. There is a lot of upsides on our project, in addition to what I told you, increasing the volume, a drastic cost reduction opportunity, and we're stockpiling ilmenite. We're waiting for the export license from the Trade Department. But also we can continue valorizing the asset by drilling deeper and drilling in other parts of the asset. We have just increased the capacity of our mineral separation plant to 24,000 tons to increase our production. Strategically, we acquired a second mine in the area, and I believe we're constantly looking at new tenements, and I believe we can become the consolidator of the mineral sands industry in Kalimantan. So, in summary, it's a great moment to be in mineral sands because of the trade war, because the lack of supply, because of the importance and the growth in demand, because we're in a Belt and Road country. It is a mineral critical for the transition to carbon zero, and prices have been solid even during the metal and mineral crash in June last year. My zircon prices went up. So they grew in June, they grew in the third quarter, they have been stable in Q4 and Q1, and they're growing again for Q2 this year. Thank you very much. If anybody wants to hear a little bit more, I'm happy to have a chat with you over the next couple of days. Thank you.